Hey everyone, Les here from BG Trading. Hope you are well. Today is October 26, 2021. We'll be analyzing the Star Entertainment Group, which the SX code is SGR. This is a tourism and leisure stock, nothing to do with the old lithium stocks that we've been analyzing over the last few weeks. But the only reason we're doing this analysis is, first of all, because we believe there could be an opportunity right now. So let's have a look. Just want to remind you, this is not a financial advice, it's just us from BG Trading, sharing with you how we apply our strategies, BG Trading and BGS20, to know when to buy, when to sell stocks, how we set up targets, stop losses, our KPIs, and much more. All in this channel for you. So if you like the way we trade, please subscribe the channel now. We also have a Facebook community called Buy Growth Sell Strategy for Share Traders. We put a lot of great quality content in that for traders and investors. So make sure you become a part of the very same analysis that I'm doing now for you. The link will be available in that group. So what are you waiting for? Now let's jump straight into my analysis. Guys, I put together this analysis today after going through the fundamentals of the company, and I'm highlighting the key aspects why we, first of all, that backs up the quality of the business and the group itself. Star Entertainment Group operates in the gaming, entertainment, and hospitality industry. Now, the group has delivered a pretty good performance across FY 2021, despite what they call extraordinary COVID-related challenges. Obviously, this is comparing to FY 20, which was very, very negative. The growth was massive. But what I want to highlight is it is pretty much in line with the growth the company has been doing before COVID. So it's very positive, in fact. Now, comprehensive acts to mitigate the impact of COVID were implemented across the Star Group. So what they did, they cut operating costs and wages and a lot of different sort of costs related, and then they managed to keep the margin pretty healthy across the whole pandemic. They stopped dividends as well, so now they probably will be looking at paying dividends into FY 2022, not sure. Interesting enough, the statutory EBITDA was up 51% despite COVID-19 and the Sydney impact, with Brisbane and Gold Coast outperforming. Sydney obviously was closed with 3-digit growth and majority of the impact being registered in FY 20. The net profit after tax was up 458%. So it's pretty good. Okay, obviously, again, reminding that FY 20 was pretty bad, so it's not harder to make a very compelling, massive growth number. But comparing to FY 19, it is still in the steady growth, which is positive and backs up the quality of the business. Now, guys, the group has taken a sustainability approach with net zero by 2030. Why I'm putting this here? What does it even matter? Now, one of the things you got to be looking at every time you spend investing or trading in a company, especially if you're investing over the long term, is whether whatever company you buy it actually has any work towards any commitment towards net zero, which could be if the company doesn't have any commitment towards that, could be potentially problems or be a media target, any problem like this that could affect, that could be like not major, but could definitely affect their overall stock price. And then I want to make sure now every stock that we analyzing, we have some has some footprint into net zero approach somehow. And then I put in this analysis a few highlights like 30% reduction, carbon reduction by 2023 across the whole group. Also, they talking about 30% reduction in water consumption by 2023. So how they're gonna do that, I'm not sure, but it's interesting to know that the company is committed to do this. And 100% take away food packaging to be compostable by 90% of the Star portfolio to attain the green rates that what they're looking at within now the next couple of years. Now the key projects on the pipeline, and they already has commencement last year, say, is the second $400 million hotel and apartment tower in Star Gold Coast, which is going to be a pretty compelling development with the Dorsa Hotel and the Star Residence Tower in the Gold Coast. So if you want the Gold Coast, so you can check it out, this project yourself. And then obviously by 2023, they expect to open the Queen Wharf in Brisbane, which is another mega project. So very interesting. They're obviously going to bring revenue. So there's some debt in there, but we're going to bring more revenue, and the company will keep growing if everything goes according to the plan. Now, the big red flag here, and that's one of the reasons we actually enter into that, because we missed the boat last time when the travel was booming last couple of months. So we missed the boat on this one. So if you look at the stock price formation, it has a very similar sort of share price movement than travel stocks like Qantas, Fly Center, and Webjet. So we pretty similar sector. So then now, but we have this disruptive problem with the company has been accused of enabling suspect money laundering, fraud, and organized crime in its casinos. How they do that, I'm not sure. But we got even if you look into just Google, the problem is you can see here. This is an interesting article that sort of highlights all the sort of problems, and they compare with Crown. A few years ago, that was unsuitable to hold a license in Sydney. I don't think that's going to happen with this company. I want to remind as well everyone that the company already sort of already subjected to ongoing regulation, regulatory oversight, including compliance checking reviews across the company operation in New South Wales and Queensland. So it's already happened. So the only thing is, there will be the hearings scheduled for end of March 2022, and then we could see some potential share price impact after that. Could be positive, could be negative, but the truth is, now, provided that the borders will be open in Queensland and that the restriction has already been eased across New South Wales, there could be a very good quarter coming up, very good quarter, and that should definitely help to boost the share price. It actually was the share price was going really, really well until this disruptive information, and this is when we normally take advantage of disruptive movement in good quality businesses, good quality companies like this one. Now, I look into the technical side of the stock. Right. So what we have here, we have this bullish intersection, which the stock price went up about 34% from this bullish intersection, and not just this one, but if you compare to Qantas, Flight Centre, Webjet again, corporate travel management, they all done a very similar sort of increment on the share price. But then this particular stock has had this correction, this pretty big correction. Okay, but now if you look at again it started going up again. It looks like the market understood the problem and really at this stage starts sort of buying back into this as opportunity. And the reason we look at it is that if you compare the volume here, you can see the volume is being decreasing quite a lot on the downside and increasing on the upside. Exactly the confirmation that we have. We have one confirmation, which is the volume. Then we have the Heikenach candle on the Heikenach sort of crossing now the yellow line. We could potentially see another green candle tomorrow. So they have two sort of confirmations already. And then if we have the third confirmation, we will be the bullish intersection level 1. So then we will see the candles actually trading again on the top above the candles trading above the yellow line, and that will confirm a potential upside on the stock. So just watch for those things. Furthermore, just to finish this analysis, it is also, if you can see here, there is what we call reversal pivot here, which obviously we have this massive down, massive sort of dip on the share price, and then the stock goes up and then goes down again, but doesn't retest the bottom. It actually tests some sort of a higher level. So we have a higher low, and that's when again we have another confirmation. So we have about 4 confirmations at the moment that we could see a potential reversal, and then that's when we are optimistic about a potential entry, and we can well apply BGS 20 strategy here as we speak. So this is my analysis about for Star Entertainment Group. I'm positive about the stock. I think the company has great fundamentals and could be a pretty good entry at the current price. But remember, as you're trading under the SMA, any entry under the SMA for a good quality company means that you're paying technically cheaper or fair price, but also you're in a dangerous area. So we need a stop loss. Make sure stop loss is a must in order to protect capital. This is my analysis. Hope you enjoyed. If you would agree with this or doesn't or disagree with us, please put in the comments below. More than happy to discuss further this company. Have a great week, and I'll see you in the next video. The whole idea when we designed BG Trading BGS 20 strategy was to use only a set number of indicators to make it simple and clear to understand and to be able to apply our KPIs very easily and very effectively. So you don't have to be any Wall Street smart person to be able to apply those strategies.